Hi there, good afternoon. You tune into ET now, and this is Market Fatafat with Michelle D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And markets are looking pretty subdued in the afternoon as well. Remember that we've got weak global handover. You have
plus the expiry also.
Plus the expiry, and also you had Fitch that has said that they're putting US under credit rating watch. They may go ahead and actually slash the ratings of United States. This because of the debt ceiling talks. There's an overhang on that particular front. But as you can see, the markets on your screen right now, we are inching towards the day's lowest point. Talking about the rest of the market, then you have the broader markets that were actually holding the fort, at least till now. But now small cap index has slipped into the negative territory. Mid cap index still holding on to positive territory. Instead, mid-cap index has actually climbed to the day's highest point. Let's break it down for you with the sectoral performance then. And you have the realty index as the top sectoral performer. It's seeing gains of about 0.6%. Let's take a look at Kolte Patil in the realty pack. And that particular counter is soaring in trades. Stellar set of numbers coming in for the quarter gone by. And you have Kolte Patil that is building on gains. 8% uptick right now on back of the earnings reaction. FMCG index hit a record high in today's trading session on an intraday basis. Now they've given up most of its gains, but nevertheless holding on to gains of about 0.3%. But on the flip side is the PSU Bank, that is the top sectoral loser. 0.9% downtick for PSU Bank, followed by metal, energy, auto, IT. All of them are seeing some sort of decline in today's trading session. But that's the way how the market setup is looking like, Vinny.
Absolutely, but let's bring on board the management of Apple. They have come out with the numbers as well. We have Anuj Khanna Sohum, founder and MD of Apple, joining in with us on the show today. Very good afternoon to you, sir, and thank you so much for joining in with us on Market Fatafat. So my first question obviously is going to be in terms of your quarter four numbers. When you talk about it, what are the synergies there? What are the revenue contributions that you expect from this going forward in terms of the tie-up that you have as well now? So what could we be expecting here?
Well, thank you for having me on your show. Well, first of all, I would like to say that the last financial year, including the Q4 results, were actually quite a resilient performance for Apple India, and we delivered value for our shareholders. I mean, year-on-year basis, I think we have shown 35% growth in our business overall, as well as in terms of EBITDA margin expansion for the company. And our resilient growth is anchored on India and emerging markets. And there we got about 20% growth even the last quarter, which is about, for Q4, about 20% growth year on year. And I think overall we are seeing very strong momentum heading ourselves into FY 2024. And we've recently, as of yesterday, announced an acquisition where we have acquired UAP, which is a US-based company. It is ranked in the top 10 mobile app marketing platforms in the US in several industry forums. And it's one of the fastest growing companies in North America. And what we are trying to basically do here is to make sure that we derive strategic synergies in the gaming vertical, where this company is deeply focused. And globally, they've got the top gaming publishers as their customers. And Apple's consumer platform stack, which has multiple use cases on CPCU conversions to be driven for our advertisers, we believe we can upsell that much more strongly in the gaming vertical with UAP integrated into the Apple family.
Right. A very good afternoon, sir. This is Shell also joining in the conversation, and you just spoke about UAP, the acquisition that you've done recently. If you could tell us over what time the integration is likely to happen. Also, if you could just highlight some more on the cross-selling opportunities that you are envisaging on back of this new acquisition that you've done.
So as you know, Apple is a consumer platform stack. We help our advertisers to drive conversions and deep value, deep funnel conversions with the consumers around the globe. And we are actually very strongly present across a number of key high growth industry verticals where we have advertisers as our customers across those verticals, and we're growing really well. We as a company have always maintained that gaming is a very fast growing vertical, not only in developed markets, but also in emerging markets with the next 5 years view to it. And therefore, we would be investing in that both organically and inorganically. Now, UAP's acquisition gives us access to the deep customer base that they have. They have got deep integrations with those customers on various mobile apps that they are publishing globally. And these are leading gaming publishers, and they're doing really well in developed markets in US, in EMEA region. Our goal is to integrate with UAP to bring in more stronger use cases of our consumer platform business to their customers as a starting point so we can grow the pie much more and also bring them to other emerging markets in the world and help them become a truly global platform with a focus on gaming. And I think that will make sure that, of all the verticals that we are targeting, the strategic top verticals where we expect high growth in this current financial year as well as for next 5 years, we would be able to, capitalize well on that and deliver much deeper shareholders value with market and margin expansion both.
I'm going to pick up on that point in terms of this, then market and margin expansion, you will deliver on that front. Also in terms of just the top line, when do we start expecting these synergies coming in from? Is it going to be FY24 later or which part of FY24 if FY24 is the answer?
I think it's going to be immediate. We're going to start seeing a lift immediately from, today onwards, and we would see it for the rest of the next 5 years. Certainly within this financial year, at least, we've got a good 10 months more to go in this financial year. So we will see immediate impact of this, and we will have a much more resilient growth in this financial year. Given that we are already looking at industry growth trends that allow us to give an organic growth of about 20 to 25%. And then when we add on to that, the inorganic growth that we will get from UAP, I think we would be in a very, very strong position to deliver, very, very positive growth, beating the kind of growth we gave for the last financial year into FY 2024.
So you're pretty optimistic about the FY24, given the fact that you have the acquisition, you expect the synergies also to flow in right from day one. You've given a guidance of margin guidance of upwards of about 20% for FY24. You've said the 20 to 25% growth is what you're expecting in India and emerging markets. Could you tell us why exactly such an optimism coming in for the growth?
The last financial year was a tough financial year. There were headwinds clearly, and all of us know that at an overall level. Even with that, we were able to keep consistent growth, and even in the last few quarters, we're delivering over 20% growth in India and emerging markets. So the confidence is very high. When the times are tough, if you can deliver great outcomes, then when the times get a little bit better, that's when we can accelerate. So I think FY23 was to create the foundations for a much greater and stronger growth in FY24. If we were not bullish about it, we would have perhaps not done the acquisition. But the fact that we are confident, we are very clear, we're very committed to our business plans and strategies for the long term, I think we felt this was the right time to do this acquisition. So yeah, I mean, the confidence is obviously there, and our actions show that better than what our words tell.
Okay. And that was, thank you so much, Mr. Sohum, for joining in with us this afternoon, giving us an understanding on what this acquisition also means for the company, how much growth can we expect to see.
Pretty optimistic.
Pretty optimistic. And gaming sector, obviously, we know is growing as well. So let's keep an eye on that one. That was the MD and CEO of Apple for you all. But let's move on and get started with all those stocks that are buzzing in trade, either on the back of news flows or on technicals. On the technicals, today we have Kunal Bothra joining in with us, while from the research team, we have Vamakshi as well as Ashesha joining in with us. A very good afternoon to all three of you all. And I'm going to start with this first stock that is in focus, and it has to be Nykaa, because this one came out with its numbers yesterday post-market hours. When you look at it, revenues came in line, but the profits and margins of the company were something that was a miss coming in. Now, in terms of overall year-on-year basis, when you're looking at Nykaa's performance, how that has come in, we're seeing a growth of 34% on a year-on-year basis. Profits are down by 70%. EBITDA performance is strong, up 84%, and margins have seen an expansion. When you compare quarter-on-quarter basis, yes, there's a decline in most of these numbers. Margins have remained flat as well on a quarter-on-quarter basis. But the main reason for this is because let's not forget that October to December quarter has festivities coming in, has the holiday season, wedding season coming in as well, which actually is a positive growth for Nykaa. But in terms of March quarter, that's a bit of a seasonally weak quarter for the company, and that is why QOQ would not be a right comparison that would come in as well. Beauty personal care segment, that's seen a revenue growth of 30% on a year-on-year basis. Fashion segment, 19% growth. And what's the important highlight that has come in is from the management is that, this FY23 seems like the losses for the fashion segment has something that has peaked out, and now maybe we could start seeing a more profitable growth hopefully next year from FY24. But also, let's go across and listen into Falguni Nair, the founder and CEO of Nykaa, on furthermore what she had to say on the fashion industry.
Absolutely. So I think in our fashion brand, we made a lot of investment last year. And I think this year we do believe that our private label brands in fashion, what we call as house of fashion brands in fashion, will be at a break-even level, and there won't be any losses in that. Even on the platform business, there will be, I think the peak losses are behind us. And I think the platform losses are also going to come down as more and more customers, repeat customer behavior improves. And plays out more, because as you acquired, the number of customers you acquired in previous year affects this number. So I think in that sense, we are very confident that we should be able to grow this business in a profitable way.
All right, moving on, let's talk about Trident, and this one also came out with its numbers. If you look at year on year, the revenue saw a decline of about 16%, coming in at around 1,573 crore rupees. There was a decline in the EBITDA as well by about 20%. If you look at the profit, was down about 28%, coming in at around 131 crore rupees versus 181 crore rupees. And the EBITDA margin also likewise has seen a contraction, coming in at around 17.1% versus 18.1% on a year-on-year basis. On back of a weak set of numbers, the stock fell as much as 7.5% on an intraday basis, and that was the steepest loss that Trident actually logged since November 2022. As of now, is also, as you can see on your screen, the stock is under pressure, down approximately 6.8% on back of weak set of quarterly results.
Okay, let's move on. And Kunal, the first stock for us that you've picked out is Bajaj Finserve today. On the charts, how was this one looking like? What is the indication that we're getting in from this one today?
So on the daily charts, the stock is showing signs of an Ichimoku pattern breakout. It's a breakout which had happened for Bajaj Finserve twice in the last 2 years. And in the previous 2 attempts, the stock had scaled up into a multi-month uptrend, post such kind of a breakout. So I'm expecting something very similar for Bajaj Finserve even going forward. The stock is still trading below its 200-day moving average, but it's still trading above the 50-day moving average, which means that the near-term trends are looking a bit better. But the medium-term trends could improve once the stock breaks past about the 1500, 1520 mark. So I think Bajaj Finserve is something which I would probably keep a watch on, especially post this interesting indicator breakout. And I would sense that once that 1500 level gets taken out, which is the 200 DMA for Bajaj Finserve, the stock could start a very strong multi-month uptrend and possibly even look to scale past about the previous 6-month, 8-month highs of 1750 to 1800.
All right, moving on, Ashesha, let's talk about Apptech. How are the numbers for this one?
Well, yes, the numbers were very strong, and that is what the stock is reacting to, holding on with gains of over 6%. Revenues for the quarter gone by stood at 178 crores, which is an uptick of a whopping 176% on a year-on-year basis. Margins have also expanded this quarter. Company reported margins at 19.6% versus 15% margins that the company reported same time last year, which means on a year-on-year basis, we have seen substantial margin expansion of about 400 basis points. Apart from this, company has also, approved bonus issue in the ratio of 2:5, which means 2 bonus shares will be issued for every 5 shares that are held. Important to note that the stock has been buzzing for the last many trading sessions. In fact, year to date, in an otherwise weak market, the stock is up nearly 50%, and in the last 1 month alone, the stock has gained nearly 16%. Today, of course, on the back of good set of results, the stock is buzzing in trade.
Let's move on, and at stock number 5, we have Prudent Vamakshi. This one too will focus on the back of its numbers.
Well, yes, Suni, and just like Ashesha mentioned for the earlier stock, Prudent is also soaring away in trade today. Strong set coming for this counter as well. Revenue did see an uptick of almost 37%. Revenue stood at 177 crores, and this growth was mainly led by a 33% growth in AUM in the mutual fund vertical, and that was coupled with insurance revenues almost doubling. Now, the growth in the AUM business was actually led by the robust SIP flows as well as the acquisition of Carvy's mutual fund folios. The net profit has also gone up significantly by almost 82%. It has gone up from 23 crores to 41 crores. The margin have also improved for this counter from 26% to 33.1%. The cash flow from operations has exceeded the 100 crore mark, and that is another milestone that the company has reported this time around. So largely a good set of numbers is the reason why Prudent is buzzing in trade today. As you can see, the stock is gaining away in trade today, up nearly 10%.
All right, moving on, Kunal, let's talk about HDFC Bank. The company held an analyst meet. You had a lot of brokerages give positive takeaways and give a thumbs up to HDFC Bank. And what about you?
So even on the charts, I think HDFC Bank has come back towards a point where technically we call it as extremely oversold. The stock is sub the 1600 mark, I think 1597.98 to be precise. It's trading at a point where it's very close towards its 200-day moving average. The last time the stock had retested the 200 DMA was in the month of September and October start 2022, when it was almost at 1420 levels, and from there the stock moved up to 1680-1700 mark. So I believe that this retest of the 200 moving average, oversold nature of indicators for HDFC Bank makes it a very interesting case to start looking at this as a contra play or a contra buy. So would in fact be looking out to initiate bullish long positions on HDFC Bank. And my sense is that this zone of 1575 to 1590 is a very good zone to accumulate from a medium-term investment.
That's the word coming in on HDFC Bank from Kunal as well. But let's move on and talk about Rupa Company. This one is in focus on the back of its numbers. When you look at the numbers, we're seeing a decline in terms of revenues of around 11% coming in for the company. Other than that, in terms of the bottom line also, that's seen a sharp fall and a sharp decline there. It's 19 crores is what the net profits came in at versus 49 crores. So almost a 62% decline in terms of the profits on a year-on-year basis. Operating performance too very weak over there as well. EBITDA is down by 63%. Margins 947 basis point contraction in terms of the margins of the company. EBITDA margins have just come in at 6.7% versus 16.2%. So weak set of numbers by Rupa Company, and on the back of that, we're seeing that the stock is falling in trade, down 1.17% in trade.
All right, moving on, let's talk about big boy Reliance Industries. And Macquarie has come out with a note on the entire telecom space, and that they have spoken about Reliance, Indus Towers as well as Bharti Airtel. But let me talk about Reliance Industries for now. They're maintaining a neutral stand. However, they've gone ahead and raised the target price to 2100 from 2050 earlier. They're saying Jio earnings growth and ROIC will lag Airtel India, that's Bharti Airtel's. They believe that Jio will see leading subscriber growth, but tariff and ROIC outlook is positively skewed in all of the Vodafone Idea scenarios. So yes, remember that Macquarie is backing Airtel in the entire telecom space. So on back of that, keep an eye out on Reliance Industries.
Okay, let's move on and talk about IDFC First Bank on the charts then, Kunal. This one has been a favorite amongst a lot of technical analysts. They had made your list, I believe, before as well, Kunal. So what are the targets that we should keep here now?
Well, yeah, I think one of the major reasons for this being one of the favorites is because the stock has consistently outperformed, managed to provide the signs of breakout, has not lagged behind. Now, look at a classical day like today, the Bank Nifty is down some 250 to 70 odd points. And on this kind of a day when there is major selling across private sector banks, the likes of ICICI Bank, Axis, etc., IDFC First Bank is up 2.5%. So that itself tells you the relative outperformance of IDFC First Bank with respect to most of the other peers in the large cap as well as in the mid cap private sector banking names. Now, the other way, the other reason to flag off IDFC First Bank is a breakout on the swing patterns the stock is getting close to. So 68.5 was the previous high for IDFC First Bank. It's just about a percent and a half away from its breakout of the previous swing highs. This could lead to a potential up move for IDFC First Bank. So relative strength, breakout on swing charts and a potential breakout of the previous swing high are one of the major reasons why I would believe IDFC First Bank can stand to outperform the entire private sector banking list.
All right, moving on, Ashesha Vanderla, how are the numbers for this one?
Well, yes, numbers were very strong and the stock is gaining over 4% as we speak. Revenues for the quarter gone by stood at 99 crores versus revenues of just 58 crores that the company reported same time last year, which means on a year-on-year basis, revenues have grown by about 69%. As far as revenues are concerned, we have seen double-digit growth across units, and this was driven by robust footfalls that the company witnessed in the quarter gone by. In fact, the company has said that footfalls have now crossed that pre-pandemic level. They have achieved 2 times growth in footfalls as compared to the fourth quarter of FY20. As far as profitability is concerned, that too has seen a manifold jump on a year-on-year basis. Company reported a profit after tax of 35 crores versus a profit of just 9 crores that the company reported same time last year. Margins too have expanded to 43% versus 35% on a YOY basis. Strong set of numbers, management commentary is quite positive. They have expansion plans as well. And on the back of that, the stock is gaining in trade today, holding on with gains of over 4%.
Okay. Moving on to another earnings candidate, and Pyramidal Pharma too in focus on the back of its numbers, Mamakshi.
The stock is in fact soaring away in the trading session today. In fact, the company has climbed the most since its debut that it made in October 2022. Now, the company is definitely gaining momentum in the trading session today on the back of a strong set of numbers. The results were much ahead of what the street was expecting. The company has in fact gone ahead and reported a net profit after 3 consecutive quarters of reporting a loss. Gross margins for this counter have also expanded due to a change in the product mix, and they're seeing some very strong sequential growth come in as far as their CDMO as well as CHG segments are concerned. Now let's look at the numbers. Revenue did see an uptick of almost 26% sequentially, up from 1,716 crores to 2,164 crores. The margins have also improved significantly on a sequential basis, up by almost 700 basis points to 17%, while the EBITDA has also more than doubled. In fact, it's up almost 2.2 times on a sequential basis at 376 crores. So good set of numbers is the reason why Pyramidal Pharma is in focus today. The stock is slightly off the day's highest point, but nevertheless holding strongly with gains of over 9% as you can see.
All right, that's Pyramidal Pharma, 10% uptick coming in for that particular counter. But let's talk about pharma space more in detail. In TVS Laboratories, Kunal, looks like the tide is turning in favor of TVS Laboratory. It is actually being noticed by a lot of analysts post its numbers. Thumbs up coming in once again.
Well, absolutely yes, and Cheryl, there are a lot many reasons for the kind of sudden interest the stock has shown over the last many months. And one of the major reasons why I think TVS Lab also pops up on the chart is the recent breakout the stock had shown of its 200-day moving average. This is a classical breakout, something which the stock alluded to over the last 8 to 10 months of this very sharp selling for TVS Lab. Now, interestingly, on the weekly charts so far, the stock has formed a bullish engulfing pattern now, and this is the first time the stock has shown this bullish engulfing pattern after I think some 8 to 9 months, and especially at a time when the stock was above that 4,000 odd levels, which means that the breakout of 200 DMA, formation of bullish engulfing, volumes looking quite charged up, the pharma sector overall looking quite interesting. All of that should bode very well for TVS Lab over the near to medium term. So I think the chart patterns look very attractive. Would be expecting TVS Lab to join back the club of 4,000 possibly in the next couple of quarters.
Okay, that is TVS Lab, but let's move on and talk about Garden Reach. This one too is in focus on the back of its numbers. We also had the management. First, let me take you through the numbers coming in there. Revenues are seeing a growth of around 10% on a year-on-year basis. The profits are seeing a growth of 17% as well. While in terms of the operating performance, weakness is seen over there. EBITDA down 38% and margins, that's the EBITDA margins, that's 3.3% versus 6%. So clear weakness in terms of the margins as well. Now, in terms of the opening order backlog for FY23 is at 24,000 crores. In terms of the outlook that the analysts have also given, they've said in terms of revenue recognition, that is to increase during FY22, FY25 expected in major contracts. Pick up in execution is to be supported by increasing indigenization as well. And overall, analysts are highlighting that they seem to be quite well placed in terms of Garden Reach as a company for India Navy's procurement plan for the next 3 to 4 years as well. They're expecting a 3,200 crore contract by FY23 as well, going forward as well. And a sudden spike in raw material prices like steel and energy can impact in terms of the profitability. But all in all, we did see a bit of a weakness coming in on the stock today. Let's keep an eye out on that one, down 5% today.
All right, moving on, let's talk about Indus Towers. Like I mentioned, Macquarie came out with a note on the entire telecom space, and that they've included Indus Towers as well, where they've initiated a coverage with an outperform rating and a target of 200 rupees per share. They are saying that India's data boom needs significant digital infrastructure, and they're seeing growth to be tepid, but dividend and free cash flow are going to be supportive of the company. They're expecting a 9% dividend yield and a 15% free cash flow yield for the company. They're saying that they see 30% chances of Vodafone Idea shutting and see 20% downside in that case, and they see 20% chances of Vodafone Idea growing, and in that they see 100% upside in the case for the stock. So on back of that, they've initiated a coverage, giving it an outperform rating, and also setting a target of 200. The stock is definitely cheering this one. It's been a while the Indus Towers has seen this sort of a spike. 3% uptick coming in for this one.
Let's move on and talk about Zee Entertainment on the charts then, Kunal. What are the targets that we should keep for this one?
Well, the stock is showing signs of weakness. In fact, at current levels, it's very close towards breaking the previous low of 176.75 for Zee Entertainment. So just about, I think, 1%, 2% away from those levels. It's a stock which has shown extreme amount of weakness consistently. There was this bout of strong news flow for Zee, I think in 2022. The stock had shown a lot of fervor post that, but then it got settled off very, very easily, and the stock from levels of I think 340 or 350 has corrected by more than 50% in the last 6 to 8 months. So it's a chart which looks weak on the medium-term time scale, and I believe that it's also dragging the entire media sector along with it. So looks to be that Zee Entertainment could continue to be in this bearish downtrend for some more time.
All right, that's the take coming in on Zee Entertainment. And on that note, we slip into a break on this edition of Market Fatafat. Viewers, don't go anywhere. We'll be back with other set of stocks to discuss.